Okay, so you're retired or getting ready to retire. Do you sell your house or maybe even set up a reverse mortgage? Please subscribe to my channel and hit that like button. Thank you. So what is a reverse mortgage? A reverse mortgage is a loan that is put on your home and you can access the equity in your home up to 55% of the current value. The amount you are able to borrow depends on your age, your home's appraised value, and your lender. You pay back your loan when you move out of the home, sell it, or the last borrower dies. This means you don't need to make any payments on a reverse mortgage until the loan is due. You will owe more interest on a reverse mortgage than the longer you go without making payments. At the end of the loan term, you may have less equity in your home. Who's eligible for a reverse mortgage? To be eligible for a reverse mortgage, you must be a homeowner, at least 55. On your reverse mortgage application, you must include all individuals that have title on the home. So even if you had maybe your son or your daughter on title, they have to be at least 55 years old. Your lender may also ask you to get legal advice, as this is a signed contract just like any other contract, and it could be complicated. When you apply for a mortgage, a reverse mortgage, the lender considers your age, where you live, the home's condition, type, and appraised value. The home you're using as a security must also be your primary residence, so it can't be a cottage or some other property. So how does a reverse mortgage work? Before getting a reverse mortgage, you have to pay off any outstanding loans or lines of credit that are on the home. So it can be a mortgage or a home equity line. You can use the money you get from a reverse mortgage to do this. You can use the remainder of the loan for anything you wish. So if you had home repairs or improvements, help with paying your regular bills, cover some healthcare expenses, and repay any other debts that you may have. However, having a reverse mortgage contract could limit you being able to get any further cash out of your home. You may be able to get the money from your loan by taking it as a lump sum payment, or you could set up your reverse mortgage to pay like an annuity, and you would get a certain amount of money each month. Unlike a regular mortgage on your home, there are conditions attached to a contract for a reverse mortgage. You have to repay the amount left owing when you sell the house, move out of the house, the last borrower dies, or you default on the loan. You could default on a reverse mortgage by doing the following: using the money from the reverse mortgage for anything that is illegal, being dishonest when you filled out your application, letting your home fall into disrepair. So you have to make sure that you repair the roof and the windows and all of those things to keep the house at the best value you can, or not following any conditions in your reverse mortgage contract. So unlike having a mortgage on your home, there are lots of rules you need to follow. So how much does a reverse mortgage cost, or associated costs? A higher interest rate than for a normal mortgage. From what I looked up on Equity Bank's website, the interest rates were more than double the going interest rate of today. So they were between 3.5% and 5.5%. You'll have to get the home appraised, so that's typically around $700. A setup fee, according to Equity Bank's site, of $1,800. And there's a prepayment penalty if you pay off your reverse mortgage before it's due. There's also could be legal fees if they expect you to get independent legal advice. The costs will vary depending on your lender. Some of the fees may be payable at the end of the contract when your house is finally sold. You may have to pay others up front. So where do you get a reverse mortgage? There's not a lot of banks that offer it. Two financial institutions offer them in Canada, Home Equity Bank, also known as the CHIP program, which is across Canada. You can get it directly from them or through a mortgage broker. They also offer a reverse mortgage in major centers across Canada. You have to shop around and explore all the options because your bank might have other products that better suit what it is you're trying to do, which most people are trying to get some cash out of their home to help pay for retirement or traveling or the such. You could sell your home outright and take that money and invest it yourself to get an income. You could buy a smaller home and take part of your money that comes from selling your larger home and invest that to create income. Maybe in a TFSA would be a good idea for that one. You could rent a home or an apartment. If depending on your age, you could move into assisted living or some alternative housing. But with the pandemic, that seems to be not such a great idea these days, unfortunately. But you really want to speak to a financial advisor to find out if a reverse mortgage would work for you, or selling your home would work on a financial basis. So there's pros and cons to anything, especially a reverse mortgage. So before you decide to do that, here's the pros. You don't have to make any payments as long as you live in your home. So if you were paying $1,000 a month mortgage payment, you no longer have to do that. Interest builds while you're not making these payments, however. You can turn some of the cash that you have in your home into investment money. You don't pay tax on the money you borrow. The money that you get from a reverse mortgage doesn't affect old age security or GIS benefits because it's not income. You still own your home and you still can live in it, but you're under contract to sell it down the road. You may have options as to when and how you receive your money. So let's look at the cons. Interest rates are substantially higher than other types of mortgages. The equity you hold in your home may go down as you accumulate interest on that loan. Your estate has to repay the loan and interest within a set period of time when you die. So, if your estate isn't settled in that time period, there could be more penalties from the reverse mortgage company. There may be less money in your estate to leave to your children or other beneficiaries. Costs associated with a reverse mortgage may be higher than a regular mortgage or other credit products. But I guess the biggest con, in my opinion, is the fact that you no longer have control over your home. Whereas if you still owned it, and yes, you put a mortgage on it, you have control to sell it and to do anything you want whenever you want without having to pay the high interest and penalties that come along with a reverse mortgage. So if you're considering a reverse mortgage, here's some questions to ask the lender about before moving forward. How can you get the money from a reverse mortgage? Are there any fees you have to pay? What interest rate you'll have to pay on the money you borrow? What can cause you to default on the loan? And any penalties you pay to sell your home within a certain period of time? How much time you have to pay off the loan's balance if you move or die? How much time your estate has to pay off the loan's balance if you die? What happens if it takes your estate longer than the stated period to fully repay the loan when you die? What happens if the amount on the loan ends up being higher than your home's value when it's time to pay the loan back? Now, if anybody remembers the early 1980s when interest rates went up to 18%, a reverse mortgage works the same as a regular mortgage. It's in blocks of years. So you could have a 3-year term term or a 5-year term, and if all of a sudden the rate went up to 12 or 14%, like it did back in the 80s, you could, end up, when you die, your estate could end up having to pay 3 times what your actual house was worth when it was sold. So all of these things have to be taken into consideration when you take a reverse mortgage. Now, if we look at the sell your house scenario or strategy, sell your house outright and take the cash, the first thing you need to do is decide what to do with the money. So if you invest the money in GICs or savings accounts, this pays very little interest. And that interest is considered income, which if you're thinking of using the TFSA or the GIS strategies that I've spoke about in other videos, this will lower your GIS entitlement. Now, you can get pretty good dividends from the stock market, but this comes with a substantial risk of losing your money. Stocks can go up, but they can also go to zero, and you are, might be risking all that money that you work so hard to build up in the equity of your home. Now, if you can place the money into a TFSA and get income that way, then that doesn't affect your old age security or your GIS entitlements. And I've spoke about that in videos that I've done before. Now, having the cash from your home can enable you to do a lot of things. You can travel, you could help your children, or you could buy that dream item that you always wanted, that 63 Corvette or 1968 Chevy pickup that I would love to have. And I guess lastly, nobody can tell you what to do with the money. The house is sold. You don't have to worry about maintaining it. You don't have to pay any taxes on that home any longer. Whereas when you have a reverse mortgage, you are still on the hook to pay for all maintenance, repairs, property taxes. The only thing you're not paying any further with a reverse mortgage would be the mortgage payment itself. But you're still liable as if you still own the home. So, in my opinion, but my opinion is just, it's mine. So before you do anything, you always want to make sure that you talk to a financial advisor. I'm just doing these videos to, make people aware of what the options are, and what my opinions are don't necessarily mean what you should do. So anyhow, thanks for watching, and I hope you got some great information out of this video. Please subscribe to my channel, hit that like button, and the notification button. The like and the subscribe and the notification helps out my channel to get more views and to help more people. Thank you.